Welcome back. Ghana's economy has been, well, making some headlines this week, some surprisingly positive ones, actually. And, we had to take a closer look. Forget the really technical stuff for a moment. We're digging into the main economic stories coming out of Ghana, what they actually mean, and maybe most importantly, why they should matter to you. Exactly. We've been looking through the latest news articles, economic reports, all focused on Ghana's situation right now, right? And our mission really is to cut through the jargon, make sense of it, and understand the real-world impact these things have on, everyday life. Okay, let's dive in. First thing that really caught my eye was the Ghanaian Cedi. It's been doing incredibly well lately. I saw it described as the best performing currency in the world this month. What's going on there?
Yeah, it's quite something. The speed and the scale of the appreciation are pretty remarkable. Since the start of April, so just over a month ago, the Cedi has gained nearly 16% against the US dollar.
16%? So what does that mean in simple terms?
Well, think of it this way. If you needed, say, 15 cedis to buy $1 a little while ago, now you need, significantly fewer. It makes things bought from overseas cheaper.
Okay, so that directly impacts the price of imported goods, doesn't it? Stuff like cars, electronics, even some foods, they should cost less in Cedi terms.
Precisely. And that's a key point. When imports get cheaper, it helps to bring down the overall inflation rate, how fast prices are going up generally.
And we have seen some movement on inflation too, right? It's down again.
Yes, thankfully. Inflation dropped from 22.4% in March down to 21.2% in April. That's actually the lowest it's been in about 8 months.
Okay, lowest in 8 months. Well, that's progress. For regular folks, that hopefully means the cost of living isn't climbing quite as fast as it was.
It should help. Yes, a stronger Cedi is a really big factor here, especially for Ghana, which imports quite a lot. We saw non-food inflation ease a bit, down to 17.9%, and even food inflation, while it's still high at 25%, it did drop from 26.5%. So like you said, progress. Still high, but moving the right way.
So where's the Cedi trading now?
Around 13.4 to the dollar.
That's about right.
Yeah, Giro 13.4 against the dollar currently. The hope is that businesses importing goods pass those savings along.
Fingers crossed. It definitely eases the pressure, reduces costs for businesses buying materials overseas. Fuel really can ripple through the economy, boosts consumer confidence a bit too, potentially. Okay, now let's switch gears slightly. Gold. Ghana is a huge gold producer, and it sounds like there are some pretty major reforms happening in that sector.
Yeah, this is really interesting. The government has effectively banned foreign companies from directly participating in the domestic gold trading market. That kicked in on May 1st.
Banned them? Why?
Well, it seems to be part of a bigger strategy to formalize and regulate the gold mining sector, especially the small-scale side of things, get a better handle on it. And there's a new board.
GoldBod, is it?
That's right. The Ghana Gold Board, or GoldBod, set up in April. They are now the only authority allowed to handle gold transactions coming from artisanal and small-scale mining, the ASM sector.
Okay. So centralizing it, what's the expected benefit of doing that?
The thinking is multi-pronged. 1, boost the country's foreign exchange reserves, the nation's savings in dollars and euros, etc. 2, curb gold smuggling, which has been a persistent problem. And 3, ultimately, increase the revenue the government gets from its own gold resources. They're looking at benefits through to 2029.
And Ghana's position in the gold world is significant, isn't it?
Top in Africa. Number 1 in Africa, and I think 6th globally. It's a major player.
Wow, production in 2024 was nearly 5 million troy ounces. That brought in over $11 billion in export revenue.
11 billion. And get this, almost 5 billion of that came from the legal small-scale mining sector, so you see why regulating it is important.
Absolutely. So foreign firms are out of the domestic trade, but they can still buy gold just differently.
Yes, they can apply to purchase gold through GoldBod now, but the rules are stricter. There are new licensing requirements, including a minimum capital threshold of $5 million.
$5 million. That's a high bar. That'll change who's involved.
It likely will? Yes. And another key change, all domestic gold deals now have to be settled in Ghanaian cedis.
Aha.
At rates set by the Bank of Ghana, the BOG. So that's another move designed to increase demand for the local currency.
Right, makes sense. More cities needed for these big gold deals.
And the Bank of Ghana itself is buying more gold too.
It is.
They've expanded their gold purchasing program. From June 1st, they'll start buying 20% of the production from 9 additional large-scale mining firms.
20% from the big guys too, so the central bank is really beefing up its gold holdings.
I saw a figure on that, dramatically. The Borg's gold reserves went from just under 9 million tons in 2022 up to over 30 million tons by February this year.
Wow, that's a huge jump.
It is. And that stockpile, combined with these new trading rules, is a big part of why the CDI has strengthened so much recently. We saw it move from, around 15.5 to the dollar down below 14.
So these gold reforms are directly supporting the currency.
That seems to be the intention, and so far the effect. Plus, foreign exchange reserves are up to over $9.4 billion end of February. That gives the central bank more ammunition to manage volatility.
So long-term, the hope is better management of small-scale mining, more tax money, less illegal mining.
Exactly. Better governance in the ASM sector, increased fiscal revenue, and containing Galamsey, the illegal mining, are the big goals.
And the large mines are growing too. Newmont has a project.
That's right. Newmont's Ahafo North project is expected to add around 325,000 troy ounces per year. So overall, gold production should climb.
Which means more export earnings.
I saw projection that Ghana might even run a current account surplus this year, partly because of gold.
Yeah, the forecast is for export earnings to rise sharply in 2025, possibly leading to a surplus of about 2.7% of GDP.
That's definitely a positive sign for the broader economy.
Okay, so stronger CD helping with import costs, gold reforms potentially boosting reserves, and the CDI further. But let's circle back to inflation, because, as you said, food prices are still a worry. Okay, so let's try and wrap this up. A lot happening in Ghana's economy this week. We've seen the CDI strengthen significantly, which is good news for import costs.
Big reforms in the gold sector aiming to boost reserves, revenue, and further support the CDI.
Right, and then there's inflation, which is slowing down overall a positive trend, but food prices remain stubbornly high, indicating ongoing cost of living pressures.
And finally, that major potential gold mine merger is on pause, raising some questions about the regulatory landscape perhaps.
It's a complex mix, really. The stronger Cedi provides some immediate relief. The gold reforms are more of a medium to long-term play for stability and revenue. But the inflation story and the merger pause showed there are still challenges and uncertainties.
And for you listening, these aren't just abstract economic shifts. Stronger CDE, as we said, could mean lower prices eventually for some imported things you buy. How Ghana manages its gold wealth impacts national finances, which affects public spending.
Yeah, and while that high cost of living is still very real, the fact that overall inflation is slowing is a key trend to monitor for potential future relief.
So maybe a final thought to leave you with. Considering all these developments, the currency boost, the gold overhaul, the sticky inflation, the mining merger pause, what do you see as the biggest opportunities and maybe the biggest challenges for Ghana's economy in the next few months?
And maybe thinking more personally, how might these wider economic currents actually affect your own financial well-being down the line? It's always a good reminder, isn't it, that these big national economic stories and our individual lives are often very closely linked.